Listen to me. If you are retired, or if you are standing right on the doorstep of retirement, you need to wake up and pay attention to where your cash is sitting right now. I want you to look me in the eyes. Your accumulation years are over. You are now in the preservation and distribution phase of your life, and that means every single penny you have must be working for you, safely, and at the maximum capacity possible. You are asking me, Susie, what is the interest rate at EverBank? And I am going to give you those exact numbers right now, but more importantly, I am going to tell you what those numbers mean for your security, your freedom, and your peace of mind. Right now, if you look at EverBank's performance savings account, they are offering an annual percentage yield of 3.9% for new accounts. If you look at their performance certificate of deposit, their CD, specifically their 7-month term, they are offering 4% APY. If you look at their performance money market account, the rate can go up to 3.8%, but it varies based on your location and your balance, dropping down significantly if you have less than $10,000 in there. And their checking? A mere 0.25%. Now, on the surface, you look at 3.9% or 4% and you think, wow, Susie, that sounds pretty good. Because you remember the days when traditional banks were paying you 0.01%. You remember leaving your hard-earned money at places like Bank of America or Wells Fargo and getting absolutely insulted by a penny of interest at the end of the month. So yes, compared to the national brick-and-mortar average, EverBank looks attractive. But we need to talk about the real problem here. The problem isn't just finding a bank that is better than the worst banks out there. The problem is that you are facing a massive financial crossroads. When you are working, if you make a mistake, you can earn more money. You can log extra hours. You can get a bonus. When you are retired, you do not have that luxury. Your mistake is permanent. And right now, the rate environment is shifting. If you leave your money in an account where the rate can change overnight without notice, you are exposing your safe cash to a massive decline in income when interest rates drop. Let's look at the fear that keeps you up at night. I know what it is. It is the fear of running out of money before you run out of breath. It is the fear that inflation is going to eat away at your purchasing power, and that the $50,000 or $100,000 you have set aside for emergencies or next year's living expenses is going to buy less and less every single year. Out of that fear, many of you do one of two things, and both of them are dangerous mistakes. Mistake number 1. You panic and chase yields into risky, complicated investment schemes that promise you 8%, 9%, or 10% returns, only to realize too late that you have put your principal at risk and you could lose it all. Let me tell you right now, if an investment sounds too good to be true, it is too good to be true. Do not do it. Mistake number 2, you do the exact opposite. You freeze. You leave all your money in a traditional checking account earning 0 interest because you want to be able to touch it, or you blindly accept a 3.9% yield without reading the fine print. So you have to ask yourself the critical question, is EverBank the absolute best and safest home for your retirement cash right now? Let's break down the truth about EverBank. First, from a safety standpoint, they are an FDIC-insured institution. Your money is protected up to $250,000 per depositor, per ownership category. That gives you safety. But you must understand how their accounts work. That 3.9% rate on the performance savings account? It is a variable rate. It is for new accounts. It can change tomorrow. If the Federal Reserve cuts rates, EverBank will cut that 3.9% faster than you can blink. Furthermore, if you look at the landscape of high-yield savings accounts today, you will find other fully insured online banks offering 4.1%, 4.25%, or even up to 5% on certain balances. So while EverBank beats the traditional giants, they are not the absolute top of the mountain. If you have $100,000 sitting in an account earning 3.9% instead of 4.4%, you are giving up hundreds of dollars a year in pure, safe income. Why would you do that to yourself? Why would you value your money less than the bank values it? Then look at their checking and money market options. If you drop below $10,000 in their performance money market account, your rate plunges down to just about 2.02%. If you put your everyday money into their performance checking, you are earning a tiny 0.25%. If you are retired, you cannot afford to have chunks of your money earning next to nothing because you didn't organize your accounts correctly. So what is your actionable takeaway? What do you need to do today to secure your cash? Step number 1, look at your liquid cash, the money you need for the next 12 months of living expenses or your emergency fund. Do not leave it in a traditional bank earning 0.01%. If you want to use EverBank, look at their performance savings at 3.9%, but compare it first to other top-tier high-yield savings accounts to see if you can squeeze out an extra 1/4 or 0.5% safely. Step number 2, if you have cash that you know you will not need to touch for the next 7 months, look at locking in a rate. EverBank's 7-month performance CD at 4% APY allows you to lock that yield in. Why is that important? Because if rates fall across the country over the next half year, your 4% is guaranteed and contractually protected for the length of that term. It requires a $1,000 minimum to open, which is reasonable. But remember, if you touch that CD before the 7 months are up, you will pay an early withdrawal penalty. So only lock up money you are certain you do not need for immediate emergencies. Step number 3, segment your money. Stop keeping a massive bucket of unassigned cash. Create a system. Keep a bare minimum in your checking account for your monthly bills, because earning 0.25% is not going to fund your retirement. Sweep every other single dollar into a high-yield vehicle. You must be the master of your own financial destiny. Nobody is going to care about your money more than you do. EverBank offers a solid, safe product that completely destroys the big traditional banks, but it is up to you to look at the numbers, look at your own needs, and decide if a 3.9% variable savings or a 4% fixed 7-month CD fits your specific retirement timeline.